Good morning, children. In the previous video, we have seen the topic oversubscription of shares, where we have gone through all the three alternatives for the treatment of oversubscription of shares. I hope you all have gone through it carefully, made a note of it, and understood. Today, we are going to discuss undersubscription of shares, which is just the opposite of oversubscription of shares. Undersubscription, if you have to see the meaning, it means when the number of shares applied or subscribed by the public is less than the number of shares issued by the company, it is a case of undersubscription of shares. I repeat, when the number of shares subscribed or applied by the public is less than the number of shares issued by the company for subscription, it is case of undersubscription of shares. So here it's written that the company has offered 10,000 shares for subscription, to which the public has applied 9,000 shares. That means applications were received by the company for 9,000 shares. So since the number of shares subscribed is 9,000, whereas the issue was 10,000, this is a case of undersubscription of shares. Pretty simple to understand. Now, there's a very important clause in case of undersubscription of shares, which is called minimum subscription. And I'm sure you have studied this word, this term in last year business studies for the chapter formation of a company. There was a clause called minimum subscription, which means that at least 90% of the shares issued should be subscribed by the public. Otherwise, the company is not allowed to start its business. So, if I go by the law, according to SEBI, that is Securities and Exchange Board of India guidelines, if a company does not receive minimum subscription, which means it does not receive subscription for at least 90% of the shares issued. Children, this is important. A theory question also. Minimum subscription is equal to 90% of the issued shares. If this clause is not fulfilled, the company is not allowed to allot even a single share. That means if the shares issued by company is 10,000 and the applicants are 8,999 instead of 9,000, then in that case company cannot start its business. Company will not be allowed to start the business because it fails to qualify the clause of minimum subscription. So whenever we have under subscription, we have to remember this term called minimum subscription. Minimum subscription is an important theory question also in exam. Now children, it is quite a common sense to understand that if the number of shares applied is less than number of shares issued, then the entire calculation will go on the number of shares subscribed. So in the same question which we have started with this chapter, what I have made a change is applications were received for 9,000 shares which were duly allotted. So issued shares is 10,000, subscribed share is 9,000, and remember 9,000 is equal to 90% of 10,000. If you calculate 90% of 10,000, it comes to 9,000. So since the minimum subscription clause is fulfilled, this company can go with the further allotment of shares. Now, if you remember our first question which we took, there in all the cases we have these entries where the narration used to be being application money received on 10,000 shares. So there is only one simple change. Instead of 10,000, the application received will be shown on 9,000 because the number of shares subscribed is 9,000 instead of 10,000 since it is under subscription. So 9,000 multiplied by 20 rupees, your application money is 1,80,000. So bank account debit 1,80,000 to equity share application account 1,80,000 is your first entry. Then you have to transfer this to capital account. The entry goes equity share application account debit to equity share capital account. being application money transferred to equity share capital. Two entries done. Then we have to make the entry due for allotment, and entry due for allotment is entry number 3, which says equity share allotment account debit to equity share capital account, being allotment money due on 9,000 shares at rupees 30 per share, which makes 2,70,000 for debit and 2,70,000 for credit. The next entry is for receiving allotment money, bank account debit to equity share allotment account, being allotment money received on 9,000 shares at rupees 30 per share. It makes 2,70,000 debit and 2,70,000 credit. The next entry will go for making first call due, which is our third installment. And remember, the third installment is always entry number 5. Equity share first call account debit to equity share capital account. So third installment due is equity share first call account debit to equity share capital account 2,25,000, 2,25,000. Being first call money due on 9,000 share at rupees 25 per share. Next entry number 6 will be for receiving your first call money, that is third installment received. The entry goes number 6, bank account debit to equity share first call account, being first call money received on 9,000 equity share at rupees 25 per share, which makes it 2,25,000 for debit and 2,25,000 for credit. Now comes the last installment, that is second and final call account. Entry number 7, to make the final call due, the entry goes equity share final call account debit to equity share capital account, being final call money due on 9,000 equity shares at rupees 25 per share, debit 2,25,000 and credit 2,25,000. And finally, the last entry will be for receiving the second and final call money, number 8, bank account debit to equity share final call account, being final call money received on 9,000 equity shares at rupees 25 per share, debit 2,25,000 and credit 2,25,000. This is under subscription of shares, where number of shares issued was 10,000, but company has issued 10,000 shares, but public has applied for 9,000 shares, and this 9,000 qualifies for minimum subscription also. So children, according to this question, number of shares issued was 10,000. If you can see here, issued shares 10,000 and number of shares subscribed, that means applied by the public, is 9,000. This is under subscription, and this 9,000 is equal to 90% of the issued shares. That means minimum subscription is also qualified. Hope this is understood. Pretty simple, the most easiest in all the subtopics which we have discussed right from the beginning. If you have understood oversubscription, undersubscription is quite an easy part to understand. So this is about undersubscription of shares, today's topic which we have covered, undersubscription of shares. Now I finally read it once again. Shares are said to be undersubscribed if the number of shares applied are less than the number of shares issued for subscription. For example, a company has offered 10,000 shares to public for subscription and applications were received for 9,000 shares. This is under subscription of shares. With this, we come to an end of this topic. I hope you have understood. Please make a note of it, understand, and then start practicing questions. The focus should be more on oversubscription of shares. With 2 or 3 questions of undersubscription, it is sufficient enough to understand it. Please keep practicing oversubscription of shares. Thank you. Have a very nice day. God bless you.